So in the unit 2, it is more about filing status and residency, right? So how many of you have watched the main sessions? Or this is purely revision, guys. So I may not cover each and every point, but I will try to complete what type of questions we can expect in the exam. So those type of question, those type of scenarios only we will see. So this is purely revision. Okay. So make sure to read thoroughly the material, and if you haven't watched the videos, just make sure to watch those videos. Then this session will be, helpful with respect to the exam. So in first we'll talk about filing status. So what exactly the filing status? How many filing status are there? In the 1040. Like before that, what type of forms we have? So we have form 1040, we have form 1040 NR, and 1040 SR and 1040 X. So for individual, if the taxpayer is individual, so these are the forms available to file the tax return, right? So 1040 form, this is for citizens and residents. This is for citizens and for residents. And 1040 NR for non-residents. And also 1040 SR for senior citizens. And what is 1040X? To amend the previously filed tax return. So if you file any tax return previously, and if there are any changes in the tax return, so to change the previously filed tax return, we file form 1040X. So these are the forms available. So the residents and citizens, they have to show worldwide income. They have to show worldwide income. So that means US income plus foreign income they have to report, because they are citizens for the USA. For tax purpose, they have to show worldwide income. Citizens and residents, they have to show worldwide income. And 1040 NR, this is for non-residents. So what is citizen, what is who is resident and who is non-resident, we will see. But for now, non-residents, they have to show only US income. They no need to show worldwide income. So and also yes sir. So who is senior citizen in USA? What is the age limit? Anyone know?
Above 65.
Above 65 years, we will consider the person as senior citizen, and this is for only residents. So resident senior citizens, I can say. And 1040X to amend the previously filed tax return. So these are the forms available. Now in these 1040 and 1040 NR, if you are filing either 1040 or 1040 NR, there are couple of filing status available. So each form having, if you see form 1040, this is form 1040. In this, we have five filing status. So one is single filing status, and married filing jointly, and married filing separately, and head of household, and qualifying surveying spouse. So this in case of 1040 only. So 1040 NR, we have only three filing status available. So 1040 NR cases, we can see single filing status, married filing separately, and qualifying surveying spouse. So that means I'm filing 1040 NR, and can I file married filing jointly? No, we cannot do that. And can I file HOH? No, it is not possible in case of 1040 NR. So in case of NR, only three filing status available. For this also, there are a couple of other rules apart from the 1040. So most probably either single or MFS. Okay. And also, so this is one difference in 1040 and 1040 NR. And also we have standard deduction. So standard deduction means irrespective of the income. So this is deduction based on the filing status. Let's say taxpayer having $100,000 income. Do we need to pay tax on the whole $100,000? No, we can get some standard deduction. So after that, we will calculate taxable income. So first we have to sum up the total incomes, and then a couple of other deductions we have, forget about those. So total income minus standard deduction. So the balance is the amount which is available for taxes. So on the balance only, we have to pay taxes. So that is taxable income. So standard deduction will be advantage definitely for the taxpayer. So these standard deduction limits for 2024. So if taxpayer filing status is single or married filing separately, 14,600 standard deduction, married filing jointly or QSS double 29,200, and the head of household filing status 21,900. So these are the standard deduction limits for 2024. You must remember these limits. And this is for 1040. So 1040 NR, do we have standard deductions? So no standard deduction. For NRs, non-residents, can we claim standard deduction? No, only itemized deductions. So itemized deductions, we usually prepare Schedule A, so that we will see later. For now, for non-residents, can we get standard deduction? No, only residents and citizens can get standard deduction. And also they had mentioned one point on the form 1040 NR on the line number 12. It is saying itemized deductions only. So that means non-residents, we can claim only itemized deductions, or for certain resident Indians standard deduction available. So only for certain resident of India. That means this is basically for students who migrated from India to USA having educational visas. So if the person having educational visa and the person is from India, then he is eligible for standard deduction, because India and USA having treaties actually. So for, based on Article 21(2), they can get standard deduction. So these type of questions we cannot expect in the exam, but for your understanding purpose. So classification as the person into citizen, resident, and non-resident is very important, because it affects the standard deduction, not only standard deduction, tax brackets, and also couple of credits are not available for non-residents. So these are the major differences between 1040 and 1040 NR. Now with this we understood, for 1040 we have five filing status. One is single filing status, and MFJ and MFS, HOH, and QSS. So these are the five filing status available in 1040. So in 1040 NR, how many filing status we can see? So we can see single, yes, we can see, and MFJ, no, MF, yes, HOH, no, and QSS, yes. So single, MFS, and QSS filing status available. So classification, this filing status basically impacts or affects standard deduction. Yes, yes or no? So it will, the filing status impact the standard deduction or not? So what is the standard deduction for single? Yes, what is the standard deduction?
14,600,
14,600. So MFJ
29,200,
29,200. MFS
14,600,
HOH
21,900,
21,900, and QSS
29,200.
29,200. So NRs, can I get standard deduction?
No.
So NRs, no standard deduction. So can I claim any standard deduction for single? No. So no standard deduction for non-resident. But when we can claim standard deduction in case of NRs?
Visa holders from India holding H1J1 visa.
Not H1J1, educational visas. So educational
Okay.
visas, F1 and J1 are
J1.
the educational visas. If the taxpayer having F1 and J1 and the person is from India, they can get standard deduction based on Article 21(2). So those are not required for the exam. So with this understanding filing status is also very, very, very important. So filing status. Let's understand filing status. So filing status, basically for all the filing status we have key date, important date. So the date determines the entire year. So date here is December 31st of the tax year. December 31st. So usually for US taxes, so we follow calendar year, right? So calendar year. So calendar year generally starts from Jan to December. So now we'll understand 2024 tax related, filing status. So 2024, to determine a person is single or married filing jointly or separately or HOH or QSS, so we require all 364 days. No, we require only last day of the tax year, that is December 31st of 2024. So that determines the entire year filing status, right? So December 31st is the key date to determine the filing status. So what about the remaining 364 days? Will it impact anything on the filing status? No. We should have to check only last day of the tax year. So other 364 days can we consider for filing status purpose? No, we will not consider the other 364 days for filing status purpose. Only the date required, last day of the tax year. Now, married filing jointly. We'll start with married filing jointly. So, who are eligible for married filing jointly and what are the cases we will see now. So, married filing jointly. The name itself, it is saying married. So, both. So, in case of married, two persons will be there, right? So, one person we call taxpayer, another person we can say co-taxpayer or spouse. So in case if taxpayer want to file, if taxpayer want to choose married filing jointly, then both should be married on or before December 31st. So both should be legally married. So here important key, legally married. Legally married on or before December 31st. And if they're filing jointly, then both must sign on the tax return. Both must sign on the tax return. If you can see this form 1040 here, sign here. So after preparing the tax return, both must sign. So your signature and spouse signature. That means in case of joint tax return, both must sign because they are responsible for the ultimate tax liability. So let's say their tax liability $10,000. That means both should pay equally. So the liability is joint and several liability. So that is the reason. So both must sign the tax return. And also, even one spouse income zero. One spouse income zero. So can I file jointly? Married filing jointly, guys. So
Yes.
yes. So but no matter what. So even here we are not checking any incomes. So even one spouse income is zero, but fine. So first condition. So they should be legally married on or before December 31st, and both must sign the tax return. Even one spouse income zero, also we can file the married filing jointly. And when we will file the married filing jointly, in another case, spouse died during the year. Spouse died during the year. Can we file married filing jointly? Still considered married. So spouse died during the year cases, we can go with married filing jointly. This is clear for the entire year. Still considered as married for the entire year. Okay. Done, guys. In this, any questions?
No.
No, right. And also special situations we can see. Special situations in case of married filing jointly. Um, one spouse, one spouse, uh, non-resident. See, this 1040 is only for residents, right? It's only for citizens and residents. Only for citizens and residents. So in this case, taxpayer resident and spouse non-resident. So can I file 1040? Can I choose MFJ and can I file 1040?
Yes, by filing election 6013G.
Yes. So In that case, special situations, one spouse non-resident, in that case, what we can do, so taxpayer resident, so no problem for 1040, we can file 1040 for taxpayer point of view. But spouse non-resident, so we generally cannot do that. Non-resident cases, we cannot file 1040, so we should file 1040 NR. But both are married, so they can, if they are filing jointly, then they will get benefit. So in that case, what we can do, we can convert the non-resident spouse into resident and we can file the 1040. So, but the problem is, I told you, resident and citizen, they have to show worldwide income, correct? So, worldwide income. And here spouse non-resident, that means we are converting the spouse in non-resident spouse into resident, then we have to show worldwide income. So this is one more point, we have to see when we are converting the non-resident spouse into resident. So we are converting, so here we are saying we are converting the non-resident spouse into resident, right? So how we can convert? So for that we have one election, which is 6013G. Election is nothing but it is a kind of form. Yeah, so NRs basically they will be having, so probably if they're having some cases we can see SSN as well. So to file the tax return, yeah, so we require TIN. So TIN is taxpayer identification number. So it can be SSN or ITIN or AATN, adoption taxpayer identification number also we have. So that is AATN for 2 years only. So that we will see later. For now, uh, this spouse non-resident, so in that case we are converting the spouse into resident. So how can we convert? For that we have to file this election is nothing but a statement. We have to give, we have to attach a statement along with the tax return, we are saying. So it is kind of statement simply. I will show you statement later, but for now, just understand we will be attaching this statement when we are preparing the tax return. So this is one important area. And another special case, in case of joint, this is first case done. And second case, same-sex marriage is allowed or not in federal point of view. So some states, they will not allow some states, but federal level, so this entire paper one is related to the, uh, you know, uh, federal level only. So same gender marriage are allowed or not from federal point of view? Yes. So same gender marriage are allowed in, for federally we can file the tax return, but some states may not allow same gender marriages. Yes, allowed. And very important question we can expect in the exam, in this married filing jointly cases. So this is very common question we can see. One is RDP or civil unions. So RDP or civil unions. Very important, this point. So what is RDP? What is civil union? Anyone remember? Guys, anyone remember? So RDP, which is registered domestic partnership, it is not actually a legal marriage. So it is kind of arrangement before marriage. So some US culture is quite different compared to India, right? So right, I think India also we have this kind of RDP setup. I'm not sure. So this is kind of arrangement before marriage. So they are, some states have this, some states had permitted for RDP. So for marriage, they usually should obtain a certificate and some process we have, right? So this RDP, which is a kind of setup before marriage. So this is state level, recognition. So federal level, do we have RDP? No. RDP are civil unions. So same. So it is depend on the state to state. The wording will change, but both are one and same only. So which means RDP or civil union means it is an agreement before marriage. So to understand taxpayer and spouse better, so this is not a marriage. So to consider the person as marriage, so they should be married only. So RDP is marriage? No. So that means federal point of view, can we file married filing jointly? No, we cannot file married filing jointly because this is purely an arrangement before marriage, right? So that means we cannot consider them as married. This is clear, guys?
Jay, one question. Is
Yes, yes.
RDP same as annulment or is it different?
No, annulment is different. I will
Okay.
come to that point.
Okay.
RDP is different and annulment is different. So in exam, if you find these kind of wordings, which is RDP or civil unions, so can we file married filing jointly?
No.
No.
No. And simple answer, no. If you see any word RDP or civil union, they are straight away not married. We cannot file married filing jointly. So same gender, yes, allowed. And one spouse resident and another spouse non-resident. So in that case, can we file married filing jointly? Yes, absolutely. By using 6013 selection. So these are repeatedly tested questions in the exam. So these three are very, very, very important. And next area, so in these married filing jointly, what are the key rules we have seen? So one rule we have seen, joint and several liabilities applies. In case of married filing jointly, so their tax liability, ultimate tax liability, because both are signing the tax return, right? So their tax liability, joint and several. This point we have seen. And spouse with no SSN cases, so how we will do? So that means spouse with non-resident. So that is also we have seen. And if one spouse refuses to sign the tax return, so can we file? So in the 1040 form, we have seen in the bottom, both taxpayer and spouse should sign the tax return, right? So one spouse refuses to sign the tax return. Can I file MFJ?
No.
So they have prepared the tax return, which is MFJ, and one spouse refuses to sign the tax return. So can I file MFJ in this case?
No.
No.
No. Answer no. That's it. So what filing status I can do?
MFS.
MFS.
MFS, obviously. So we will see MFS. And so maximum stuff we can expect in the married filing jointly is this much only. And another case, which is amending the return, this is also repeatedly tested area. Amending the returns. MFJ to MFS and MFS to MFJ. So what is amending the file? Amending the return in case of MFS to MFJ and MFJ to MFS. So anyone remember when we can amend the filing status from MFS to MFJ?
Within 3 years of unextended due date of April 15th.
MFJ to MFS. Okay.
In case of annulment, we can do MFJ to MFS maybe.
Exactly. So here annulment cases. Okay. So here MFJ to not MFS. So MFJ to other filing status. I can say single or HOH. But yeah, annulment also case where we can change where we can amend the filing status. Let's say when we can say these kind of scenarios. Taxpayer filing status. Okay, let's say we are in 2024 year. We have filed Form 1040, which is filing status is MFJ. So we have filed the tax return on usually 2024 tax return when we will file in the next year before 15th April, which is original due date. So after that also can we file? Yes, definitely we can file. So and also for that we have 6 months extension option we have, so which is form 4868 we can file and we can get 6 more months extension time. So extension is just to file the tax return later, not for payment. The payment should be made on or before 15th April. If you miss to pay anything, then we have to pay failure to file penalty and failure to pay penalty, and as well interest also we have to pay. So those points we have seen in unit 1. So unit 2 not required for now. And form 1040 NR we have filed on March 2025 5th. Okay, 4th. So in this case, we have filed MFJ, and on of sudden, you change your mind. So from MFJ to MFS. So taxpayer would like to change the filing status from MFJ to MFS. So in that case, can we do MFJ to MFS? So here we are okay. So to change the filing status, we require one form. We require one uh, tax return which is 1040x. So previously they have filed 1040. Now to amend the filing status, we have to file 1040x. So first case MFJ to MFS. So first thing, is it allowed? Basically yes. So this changing can be done only before original due date. So they can amend the filing status from MFJ to MFS, but only before original due date, which is April 15th, of the next year. So after that, can I change my filing status from MFJ to MFS? Let's say we have filed on March 4th, 2024. Now you change your mind on April 1st, and you would like to change from MFJ to MFS. So can I file 1040X and can it be valid? Yes. Now I'm on April 17th. I haven't done any amendment, but I would like to change the tax return from MFJ to MFS. So can I do that on April 17th? So can I file 1040X? Is it allowed? No.
No.
You can do MFJ to MFS only before original due date, which is April 15th of the tax year, right? So after due date, can I do the changes? No, absolutely no. You cannot do that. This is clear, guys. Guys, any questions in this?
No.
Jay, one question. In
Yes.
case of annulment also, if we are filing after 15th April,
Yeah,
then
annulment. I will come to the annulment point.
okay.
We will discuss that. Okay. So first case, here, when we can amend the previously filed, when we can amend from J to MFS, yes, we can do, but this should be before due date. You can do n number of changes, but it should be done before due date. So this is MFJ to MFS. But what about MFS to MFJ? IRS encourage them to file married filing jointly, not married filing separately. Because if they are filing separately, there may be, relationship also might be changed. So IRS point of view is completely different. So IRS is trying to encourage them to file jointly only. So that is the reason for joint cases, they are giving so many benefits. So they can get standard deduction, higher tax rates, higher amount, higher deductions, and many of the credits are available for MFJ only, not for MFS. So IRS is trying to encourage them to file married filing jointly. So separately, no, they are not trying to file. They are not trying to give maximum benefit to MFS. So if you can remember the logic, then this due date this point you can easily understand. MFS to MFJ to MFS, no, very limited cases we can do before original due date. And what about MFS to MFJ? So IRS intention is to file married filing jointly, right? Married filing jointly, even though it may be last to the IRS, but fine. So they are filing jointly. IRS intention also same. MFS to MFJ, can we do? Yes, we can do. So here we usually have 3 years time to change the filing status from MFS to MFJ. Okay. So the very flexible. MFS to MFJ very flexible. MFJ to MFS not very flexible. So once due date passed, then they cannot change from MFJ to MFS. This is clear, guys.
Yes.
Okay. Next one we have annulment rules. So annulment, which is, what is annulment, guys? This is also a very important question. What is annulment? No one knows.
It's kind of null and void.
Okay. Okay.
Yeah, not considered as marriage anymore.
Yes. So so it is a legal decree. I think I can say court decree stating that the marriage never valid. So marriage never valid. Marriage never valid. So court had given a decree or judgment stating that the marriage was never valid from the beginning, not from the tax year. So from the beginning. From the beginning, which means from the date you consider as married, so from that date it is null and void, which is never valid. Let's say taxpayer and spouse are married, so they consider them as married. Okay, they have filed 10 in 20, from 2020, so they have filed MFJ only 2020, 2021, 2022, 2023, and 2024. Court had given the judgment which saying the marriage is null and void, so marriage never valid. But you have filed the tax return from 2020. Here what happened, the court decree, we had received court decree on July 1st of the tax year, July 1st of the 2024. But what happened, we have already filed the tax return. Here to consider, to file the married filing jointly, the first important point, legally married, right? Legally married on or before December 31st. But legal, the court itself, it is saying they are, this is not a legally married. So some cases, based on court, based on, I can say, marriage rules and all, so they have considered, court considered that they are not married, but they have filed the tax return already. So court, if court is saying annulment, that means we should give the impact from the date you considered as married. So here that means 2020, is it married valid? Marriage is valid in from 2020? No. Marriage is not valid from 2020. If annulment means we have to see from the beginning. Marriage is not valid. So in this case, what we can do? So they have filed
Amend the
marriage filing
return.
jointly already. So that means we have to change the filing status. Now this is one special case. So MFJ to MFS is allowed or not, which is not allowed after due date, correct? But here MFJ to other filing status we are doing. So now in 2020 we have filed the tax return already. What we can do? We can amend the previously filed tax return by using 1040X. So that means you have to see the condition in 2020. So in 2020, taxpayer and spouse both, only two persons we have. So they are not married. They are married. They have considered that they are married, but court is saying they are not married. That means each person should file single tax return. So taxpayer will consider the taxpayer as single, and spouse also will consider as single, and they will again amend the previously filed tax return. So 2020, 2021, 2, 3, 4 for all the years. So 2024 we will file 1040 only because we haven't filed the tax return, right? So in 2024 you can usually file. So if you filed already, then you can amend. If you haven't filed the tax return already, then you can file 1040, either 1040 or 1040X. So this is very important, very heavily tested area. So annulment means you should give the impact from the beginning of the marriage, which you have already considered as marriage. So consider it as invalid. This is clear, guys?
Yes.
Yes, right. So in annulment cases, what form we will prepare, guys? In annulment cases, what form we will prepare?
1040X.
1040X, absolutely. So annulment rule, retroactive. So that means we have to give the impact from the beginning. So marriage never exists and must be annulled all affected years. For that, we have to use form 1040X. So annulment means marriage is treated as never existed. So must amend previously filed marriage filing jointly to single or HOH. So based on the filing status. Okay. So this is very important in annulment. So in this whole topic in married filing jointly cases: RDP, heavily tested area, civil unions, and never married, which is annulment. Make sure to read these at least. So if you don't have time, then at least make sure to cover these areas. So RDP. So what is the key rule in case of RDP?
It is not considered marriage for federal
Not
purposes.
considered marriage for federal tax purpose. Annulment,
Null and void.
never married, which is null and void. And also we have to amend the previously filed tax return by using Form 1040X. And now we'll start with next important area, which is married filing separately. So in this case also both
Yeah,
are
one
married.
question.
Yeah.
For RDP, for state purposes, all filing is fine.
Yeah,
Marriage.
some states allow RDP, so some states will not allow RDP. So what are the states allowed RDP? They can file. So still they are married for the state laws purpose only. So they can file married filing jointly, based on the state.
Okay.
But federal, it will not consider. So we cannot file married filing jointly, which is state level agreement, right? RDP, which is so this is many agreements are IRS don't have any specific rule for marriages, so which is completely based the complete option given to the states. Okay.
Jay, one question.
Yes, yes, please.
Yeah, non-resident spouse.
Okay.
So if you are filing that election of 6013G,
Okay.
so which form we are filing? Are we filing 1040 or 1040 NR?
1040 only.
1040, okay. So if we are not electing through that 6013J, so at that time, can't we file jointly or can we file jointly with 1040?
So practically, so 6013Z, which is an election, which means which is a farm. So
Yeah.
you have to attach the farm to the IRS. That's it. So even if you don't file, even if you don't attach farm, also we can do marriage filing jointly. But whenever there is an audit, then they will IRS will ask you to provide the documents and all. So in that case, it will be a problem for you. So usually filing purpose, so it is not you will not see any kind of diagnostics, or you cannot see any kind of errors. So simply we can file, but that is option given to us, right? So we have to attach the form to the IRS.
Okay.
Okay.
And treaty, will there be a question on treaty countries?
No. IRS will never ask international taxes, but that is there in the form. So that is the reason I just showed you the
Okay,
form.
fine.
So which is Article 21(2). If you want to write, you can write Article 21(2), which is treaty between India and USA for students only who are on educational visas. Like we have seen visas as well. So who are on educational visas, so they can get this election. So they can get the standard election. And now MF, yes, I think I answered your question.
Thank you.
Okay, so now we'll start with MFS. So when we will file MFS, so once spouse refuses to sign, then yes, we can go with MFS. So why usually people file MF? Yes, even though they are married, but why people usually file MFS? Because one spouse refuses to sign. Because why they will refuse? Because the tax liability is joint and several, right? So the tax liability is joint and severally. That is the problem, right? Because their marriage things are quite different compared to our marriage culture, definitely. So that is the reason they may be live with this co-taxpayer for there is no specific time. But India, if they marry, definitely they will stick to the same person. So I think after COVID, so I have seen cases where they are applying for divorce. Divorce cases are high after COVID, but before COVID, yeah, it was fine. Now, if one spouse refuses to sign, so then we should file MFS. And because they're in their because at the tax point of view they can file MFS. So joint and several case. And also liability protection. Yes, so this is for liability protection. And some cases, so taxpayer income, they will not reveal to the spouse for taxpayer. They keep finances separately. So they will not even show the incomes. Some I have seen cases. So keep finances separate. Maybe their reasons may be different for person to person. So because of these reasons, generally they will go for MFS. So in this, you will be having so many disadvantages. So disadvantages I can say are disallowed areas, MFS cases. First one, we cannot claim EIC credit. EIC, which is earned income credit, you cannot claim. And also child and dependent care credit. So child and dependent care credit. So these credits we will see later, I think. Okay, so disadvantage. So in case of MFS, we cannot claim majority of the credits. And here is the important area. We have taxpayer and spouse. So one spouse is not willing to sign the tax return jointly. That means they must file, each person must file MFS here also MFES, right? So in this, we have deductions. We have two types of deduction. One is standard deduction and another one itemized deductions. Do you remember standard deduction and itemized deductions? So taxpayer want to claim standard deduction. Okay. So spouse must claim standard deduction. So there is no option. So spouse, if taxpayer want to claim standard deduction and spouse want to claim itemized deductions, can we do that? No. Both must either claim standard deduction or itemized deduction. And one taxpayer here, this is fine. So both should claim standard deduction or both should claim itemized deduction. So taxpayer would like to claim standard and spouse would like to claim itemized deductions. Is it valid? Can we do that? Taxpayer
No.
would like to claim standard
No.
and spouse would like to claim itemized deductions. So is it valid? No. Both either should claim standard deduction or they should claim itemized deduction. So is it valid? Answer, no. It is not at all valid. So IRS definitely after processing their both taxpayer and spouse tax return, they will send you a bill. So they will send you a CP 2000 notice they will send. So they will ask you to change the deduction either of this spouse. Either the taxpayer should change the option, so which is standard deduction or itemized deduction, or spouse. So if one spouse is filing 1040X, then that will be fine. And yeah, so one taxpayer would like to claim itemized and spouse would like to claim standard deduction. Is it valid? No, not at all valid. So both SD allowed?
Yes.
Yes, it is fine. Both itemized deductions allowed?
Yes.
Is valid. So this is fine, but both should not claim different deductions. So either standard or itemized deduction. So this is very, very important area. In case MFS, we can see this. And also community property states. So this is right now, I think they are testing a little bit, I think I can say, which is experimental topics. They are testing community property states, but I don't think so. This is for main scoring purpose, but yeah, which is there in the experimental option, I think. But still, we will understand what is community property states. So anyone know what is community property? Community property states. I think if you are working person, you might be seeing this in case of California. If you are preparing a tax return for California, Arizona, Idaho, Nevada, New Mexico, or Washington. So those are okay. So we have totally 9 community property states. So community property, basically these states are related to not US states, I can say, which is Spanish or Mexican legal tradition. So after forming USA, so there are a lot of changes. Like there were only few states, but the USA, which is consolidated of all these states near to the main area. So after forming USA, so they have added few more states which are California. So California, which is under Mexican area, which is Mexican ruling state. So they merged with the USA. So that's the reason we call this United States. So United States means this is combination of all the states. So this community property states, I can say few states, I can say California, which is community property state rules. So they follow Mexican legal traditions. So exam purpose, it is not required, but they may test on the experimental questions. So Mexican legal traditions, I can say. English traditions are different and Mexican legal traditions are different. So in the community property states rule saying after marriage, whatever the income taxpayer is earning, so that is not only taxpayer income. So that is 50% taxpayer income and 50% spouse income. If spouse is earning any income, so that is not only spouse income. 50% is spouse income and 50% is other spouse income. That means taxpayer income. So that means if any person residing in community property state, that means whatever the income taxpayer is earning, so 50% to taxpayer and 50% to spouse. If spouse is earning any income, 50% to the spouse and 50% to the taxpayer. So this is what community property rule is saying. So whatever the income earned after marriage, so those income we have to split between taxpayer and spouse into 50-50 percentage. This is clear. Community property rules, which means if any spouse living in this area, that means the income we have to split 50-50 for state purpose only. Federal purpose, can we split? No. Only for state purpose, we will split this income into 50-50 states. So whenever we are preparing any tax return, practically you might be seeing this is California cases, you will definitely will see this community property, which is option, it will pop up like I think before filing return, it will give you kind of information. Critical diagnostics case, you can see this community property. And
Jay, is it irrespective of their earning?
yes,
They'll have to pay 50-50. Okay.
correct. Idaho, Arizona also community property states only. Yeah. So community property state means, so for state level purpose, so whatever the income they are earning, so they must report 50% of the community income each. Okay. So this is one important area. And next one, so that's it. That's it in MFJ and MFS. Next one, we'll start with HOH, which is very, very, very important. So we will see what type of questions we can expect in the exam. So to consider the filing status, which is head of household, the core requirement, which is both are, so here taxpayer unmarried are considered as unmarried. Considered as unmarried. Unmarried are considered as unmarried. What is considered as unmarried? We will see. Yeah. First condition. Second condition, taxpayer should paid more than 50% of the cost of maintaining home. And taxpayer should have qualifying person. Then yes, we can go with married head of household filing status. So to consider taxpayer filing status, which is head of household, the first important area, taxpayer should be unmarried or are considered as unmarried. What is considered as unmarried? That means married only, but for HOH purpose, we will consider it as unmarried. So this we will see considered as unmarried. And also next important question, next important point, paid more than 50% of the cost of maintaining home. What is 50% of cost of maintaining home? Anyone remember? No one have watched the videos, I think. No one have done.
The utility expenses of running the home, the food to be eaten at the home, not the outside food.
Okay.
Like overall
Rent,
cost.
mortgage, interest, penalties.
Yeah. So here, taxpayer should pay more than 50% of the cost of keeping up home expenses. Cost of keeping home expenses. So only related to the home. So for a home, what kind of expenses we can see to live in the home? To live in the home, yeah, I think someone told. To live in the home, what kind of expenses we can generally can see? Rent, utilities,
Taxes, mortgage taxes.
taxes, yes, taxes, mortgage, home mortgage, interest,
Penalty.
repairs, and Food. Okay, clothes. Clothes, can we consider? Yes or no?
No.
No. Clothes, no. To live in the home, clothes is not very essential item. So they will be having clothes, but yeah. So we will not consider it as 50% in calculating 50% of cost of keeping up home expenses. And also health insurance. To live in the home,
No.
is it mandatory? No, we will not consider. And property insurance. See, only one thing. So only home expenses. So to the home, what kind of expenses we can see? Plus food eaten in the home. So only these two. Food eaten in the home. That's it. Health insurance. So it is not related to home or not related to food. So no. Property insurance. It is related to home or food. Home. Yes, allowed. And rent. It is related to home. Yes, we can allow. Utilities allowed. Taxes. Home allowed. Home mortgage. Home allowed. Repairs. Clothes, which is not related to home, not related to food eaten in the home, so which is not allowed. Health insurance. This is also known. Life insurance. Guys, which is related to food or home. Life insurance.
No.
No, not allowed. So yeah, so this is the key. Either it should relate it to the home or food eaten in the home. Yes, then only we will consider in the 50% of the cost of keeping up home expenses. So let's say what are the expenses we have. So just sum up everything. Like let's say we have 10,000 expenses, out of which taxpayer should pay more than 50%. So then only this second condition satisfied. Okay, taxpayer should pay more than 50% of the cost of keeping up home expenses. And also he should have a qualifying person. So what is qualifying person? We have seen in the dependence topic, but yeah, we will cover that again. Unmarried or married and considered as married. Unmarried. So qualifying person. So qualifying person means the taxpayer should have a dependent. We will see in the dependent section. So these are three important points to consider the person as head of household. In this, what are the heavily tested area which is considered as unmarried? That means they are married only, but for HOH purpose, we are considering as head of household. So what is considered as unmarried? So which means if taxpayer is unmarried, then fine. Or taxpayer married, but for HOH purpose only, we are considering as unmarried. So that means they are married only, but for HOH purpose, we are considering as unmarried. What are the cases? So first important area, taxpayer and spouse both lived apart from in the primary house in the last 6 months, lived apart from the spouse last 6 months. So this last 6 months line is very important. That means they are married only, taxpayer and spouse both are married, but in the last 6 months, they are not living in the same home. So last 6 months means Jan to December we have year, right? So in this Jan to December, last 6 months, which means from July to December, they are not living in the same home. Taxpayer and spouse not living in the same home, because usually, if they're applying for divorce, but fine. If they are not applying for divorce, some cases other spouse or taxpayer may not give any intimation, so they will simply leave the home. So in that way also we can see cases. So that is the reason IRS is saying, okay, even though you are married, even though you haven't applied for any divorce, but if you don't have any clue about other spouse, then these kind of scenarios we can see. If other spouse is not living in the home in the last 6 months, then for filing income tax purpose, you can considered as unmarried only. Okay, this is clear, guys? Say yes or no.
Yes.
So married,
Yes.
but last 6 months. So that should be from July to December. This is very important. Even if other spouse came to home in the last day of the tax year or at any point in the last 6 months, then you cannot apply this provision. We should apply the provision only and only in case in the last 6 months, not even single day, the other spouse is not in the primary home, then we will apply. So here very very important. Some cases, they will give in the exam, other spouse came to the home on the last day, which is on December 31st. So can we consider it as unmarried for tax purpose? No, we will consider it as married only. But when we will consider it as unmarried, in the last 6 months, not even single day, the other spouse should not come to the home, then only we will consider it as unmarried for HOH purpose only. Only for filing head of household, we can use this option. For other cases, can we use the option? No. This is clear. And also, this is first condition considered as unmarried. So married, okay, for HOH purpose only unmarried. Lived apart from the spouse last 6 months. So second condition, paid more than 50% of the cost of keeping up home expenses, that we already know. And very important area, third condition, this is for US citizens or resident spouse. US citizens or resident spouse only we will apply. For NRs, can we use the provision? No. And also, next important area, so they should have qualifying children. Qualifying children lived with the taxpayer more than 50% of the year. That means more than 6 months in the year. Then only we will consider as unmarried and we can go with head of household filing status. So these are the important areas. Is that clear, guys? Guys, any questions in this? Yes or no?
There one question.
Yes.
It has to be only qualifying child, or it can be qualifying relative also, like parent
Qualifying,
or
yeah. So qualifying relative for unmarried cases. But if you want to considered as unmarried, then you should have qualifying children with the taxpayer for more than 50 days, 50% of the year.
okay. So if a couple don't have any child, they won't be considered as HOH, right?
Exactly.
Okay, okay.
So for considered as unmarried, so let's say taxpayer himself, he is unmarried. We have taxpayer unmarried, straight away unmarried, and taxpayer having qualifying relative, not children. Taxpayer having qualifying relative. So can I consider HOH? Yes, absolutely. Taxpayer considered as unmarried. Taxpayer considered as unmarried. In that case, we require qualifying children for HOH purpose. Okay. This is clear. Guys, any questions in this? Yes or no, please?
No.
Jay, can you please explain this part again? I missed some network issue, sorry.
Yeah. So this considered as unmarried cases, we definitely should have qualifying children. To consider unmarried, and so we have taxpayer. Let's say here is the provision which is considered as unmarried. So if taxpayer having, so first area, so we'll start with basic rules. So HOH rules, so unmarried are considered as unmarried, okay, paid more than 50% of the cost of keeping up home expenses and should have a qualifying person. So if we are meeting this condition, then we can go with HOH case. But to considered as unmarried, so here it is saying unmarried, that means single. So single plus more than 50% expenses plus having qualifying person. So any qualifying person, then we can go with HOH. But to considered as unmarried, then we should see these important conditions. First condition, lived apart from the spouse the last 6 months and paid more than 50% of the cost of keeping up home expenses. So this is regular condition, and this person should be US citizen or resident and should have qualifying children lived with the taxpayer more than 50% of the year. To considered as unmarried, you should have qualifying children. That's it. This is clear, guys.
Yes, thank you.
And also uh, who are not qualifying persons. And also, yeah, so qualifying person, one more important thing. So qualifying person, we are saying qualifying person here, right? So qualifying person cases, qualifying person. So three conditions. So qualifying person, we have some rules in this. So qualifying person rules, which is dependent parents, other relatives. Dependent parents, no need to live with the taxpayer. This is very important. Dependent parents need to live with the taxpayer in the home? No, they no need to live with the taxpayer. Other relatives, so they must live with the taxpayer all the year. And children, 6 months is enough. These are the very important areas. So in the exam, they may test on this area, definitely. So parents no need to live with the taxpayer. But what about other relatives? So they must live with the taxpayer all the year. And children, so 6 months condition is enough for children. This is clear? You must remember this point. And next one, qualifying persons. So
I have a doubt in other relatives.
yeah.
In dependent chapter, we considered as qualifying relative when a person resides with the taxpayer more than 6 months.
Yes. That is for dependent purpose. HOH has its own separate rule. So to consider as HOH filing status, we must satisfy all these rules. Okay. So who are non-qualifying persons? So we understood who is qualifying person. Who is not qualifying person? So boyfriend or girlfriend, can we consider? No. Roommates? No. And cousins? Cousin? Can we consider for HOH purpose?
No.
Unless they live whole year. If they're meeting full year, and also who is qualifying relative test. So who is again we will see qualifying relative test later, but for now make sure to remember this point. Cousins, if the cousin is meeting full year, then yes. And non-dependent individual, the name itself, it is non-dependent, we cannot consider for HOH purpose. So these are the important areas. So very, very important area. Parents no need to live with the taxpayer. This is heavily tested area. And other relative, they must reside with the taxpayer. And considered as unmarried conditions also important. Three important in HOH. Considered as unmarried. Make sure to see the rules, these 4 rules, and also parents and other relatives. So if you can remember these 3 points, then HOH is easy. And next one, qualifying surviving spouse, QSS. So when we will file QSS, so HOH might be you feel kind of confusion, but once you do little bit revision, then you can easily understand HOH. And qualifying surviving spouse rule. When we will use this qualifying surviving spouse, so this is valid only for 2 years. Only 2 years. And when spouse died during their cases, what filing status we will file, guys?
MFJ.
MFJ, absolutely. So MFJ, next 2 years, let's say this is in 2022, in 2023 and 2024, we can file QSS. So that means QSS is after death of the taxpayer, the next year of the death of the spouse. So in that case, we can go with QSS, and this is one important area. And also death of the year MFJ. So for next 2 years QSS. Only if so death of the year, death of the year MFJ, next 2 years
QSS.
QSS. QSS only if having dependent children. Dependent children only. So other than dependent children, can we do that? No. And also only this condition? No. So first death of the year MFJ, and next 2 years QSS if dependent children and pays more than 50% of the cost of maintaining home. And only this, no, we have another conditions as well, which is didn't remarry to someone, then only we will you. And child live with the taxpayer. So temporary absence also allowed? Yeah, temporary absence also fine. Fine. So child live with the taxpayer all the year. So see here, important key, which is child live with the taxpayer all the year except temporary absence. Then only we can go with QSS. This is clear. Spouse died in the last year. The first one, spouse died in spouse died last year or year before also fine. Year before also fine. And death of year of death MFJ, and next 2 years QSS if has dependent children and pay more than 50% of the maintaining home and didn't remarry to anyone and child live with the taxpayer all the year. Temporary absence is fine. So what is temporary absence? Temporary absence, which means for school purpose or summer camps, or so the children may be in the hostel, so that is temporary absence, that is allowed. Or the children is in the vacation, which is summer camp, so that is allowed. So very temporary, very cases, few cases we will consider as temporary absence. So temporary absence is fine. And also very importantly, children's, we have different type of children. One is natural children, adopted children, and
Foster
foster
child.
children. Yeah. So for QSS purpose, foster children are not allowed. Foster children, QSS purpose. So can we consider not eligible? Foster children may not support the QSS status. So if you are claiming, if you are filing QSS, then make sure the children should not be foster children. What is foster children?
Children
Given
placed
by
by
the
court or
court
in
or law.
agency.
Yeah. So children placed through agencies or through court, then we will consider the children as foster children. So foster children, for the purpose of QSS, foster children are not allowed. Okay. So this is another area in QSS. And what are the benefits of QSS? Okay, we are filing QSS. That is fine. What are the benefits?
Standard deduction of 29,200.
Highest standard deduction. Perfect. Highest SD. And only standard deduction. No, actually, tax brackets we have like 10% tax, like US taxes. So many of the income tax are progressive based tax. So if your income is increasing, your tax liability also increase based on the slabs. So slab rates, like very best example I can say, we do pay power bills, right? So the power bills based on the slab rates. So for 100 units there will be one rate, more than 100 to up to 200 there will be one rate. Likewise, we have income tax system also kind of slab tax rates. So this QSS filing status based on the MFJ tax bracket slabs. So that is the advantage they can get. QSS tax bracket, I can say MFJ tax bracket also they can get, and highest standard deduction. So these are the benefits in case of QSS. And next important one, which is single filing status. single filing status. So when we will consider the taxpayer as single, unmarried. So
Legally
unmarried,
separated and do
And
not
legally
qualify
divorced.
for any other status.
unmarried or married and legally divorced are separated on December 31st, on or before December 31st, then we will consider the taxpayer as filing status as single. And also RDP cases always, what filing status we will do? RDP, registered domestic partner. RDP cases we usually file single only unless they have qualifying children. So RDP are civil unions, which is majority of the cases we will file single filing status. And dependency, we will see the dependent rules. So dependents we can classify into two: dependent children and other dependent. So that is important only, but we will see in the tomorrow session. Yeah, now we'll quickly move on to the residential rules for filing status. Residential rules. What type of questions we can expect in the QSS? The QSS, very importantly, this is the important area. Foster children may not support the QSS. If you are filing QSS, make sure the children should not be, foster children. This is important. And yeah, how many years we can file QSS? So this is heavily tested area, 2 years. And also another area I can say, they will give you scenarios. In 2022, they have filed QSS, and 2023 they have filed QSS. And what will be the filing status for 2024?
Singular head of household.
Yeah, 2022. So QSS is only for 2 years, right? So 2022 they have filed QSS. 23 also they have filed QSS, and 2024 can I file QSS again? No, we cannot file QSS. Now, what is the filing status available? So filing status, just check, the other filing status. So if taxpayer having dependents and single, so QSS cases only one person will be there, one taxpayer will be there, right? That means he is single taxpayer and having dependents. So in that case, what filing status we will choose? Single plus dependents. HOH.
HOH.
So we can go with HOH. That means in 2024, either, and some cases this dependent may be remarried to someone, so which means he is no longer a dependent. In that case, single. So that means single, you can go with single or HOH based on the situation. Yeah, dependent rules for filing status. So the persons we can classify into 3 areas usually. So one is citizen, US citizen, US citizen, and resident alien. So who is not a citizen for the USA, we call them as alien. Non-resident alien. In Telugu, I can say Grahantravasi. In Hindi, I don't know. So anyone know Grahantravasi? No one from Telugu states?
I know.
Okay. Okay. So yeah, but alien, which means other foreign areas for the USA, US part, who is what are the foreign countries other than US people, they consider as aliens only, and resident alien and non-resident alien. So citizen. So when we will consider a person as citizen, who is citizen actually? Who born
A
and brought
person
up there in
holding
the
a
country?
green card.
Yeah. Sorry, go ahead.
A person holding a green card.
Okay. The person having green card also citizen. Okay, fine. But usually citizen for a country, this is based on the place of birth. If the person place of birth is in USA, obviously he will be a citizen. So citizenship will come from based on the birth. Like I think there is some SIR going on in some states. I think in West Bengal, SIR. Anyone knows this SIR process or something?
Yes.
Yes, right. Okay. So this is purely based on their citizenship status and based on their father or mother, whether they born in the India or not. So they are showing all the areas. So this is purely based on the citizen. SIR is a separate body actually. So yeah, and also citizenship. This can be based on the birth, or other cases. Other cases, if the person satisfied with other conditions also, they can get the citizenship. Like India, like we are Indians, right? So we are citizens to the India. But even if the person place of birth not in India as well, they can get the citizenship. So I think I do tell the same example. So you know Adnan Sami. Adnan Sami is not Indian, you know, he's a singer, famous singer. So a lot of songs he sung in Telugu and Hindi as well. So his place of birth is not India, so he's from neighbor countries, but he get this citizenship in India. So citizenship not only from the birth. So if the person meeting other conditions also, he can get this citizenship. Okay, and this straightforward straight away. If the person born in USA, we will consider this person as citizen. And resident alien and non-resident alien. How we will consider a person as citizen, resident and non-resident? So to consider a person as resident, then they should have green card. Who will issue the green card? Usually, if you want to stay in the USA, you should have a valid visa. So visas will be issued by USCIS, United States Citizenship and Immigration Services. So they do give these visas. So one visa which is green card, and another one green card which is temporary, which is permanent visa. Permanent visa and temporary visas we have. Temporary visas. So let's say we have temporary visas, educational visas, employment visas, and also we have business visas and dependent visas. So many visas we have. So these visas are temporary only. But if you get green card, then it is permanent residency. So which is, we can say, PR, permanent, visa type. If the person having green card, he is not a citizen to the USA, then also we will consider the person as resident only. And other than green card, so if the person don't have green card, the person based on he is residing in the USA based on temporary visas, then we have to check for SPT test, substantial presence test. For the tax purpose, we will consider the person as a resident if he meeting with the SPT test. SPT, the name itself, it is substantial presence test. Substantial presence, that means your presence should be there in the USA. So substantial presence, that means in the year, what is substantial portion, which is more than 50, which means 180 days. So for SPT test, we have a couple of other conditions. The first condition, the taxpayer should reside in the USA for at least 31 days. So temporary visa, right? So temporary visa cases, he may arrive in the current year. So it may be more than 30 days or less than 31 days. If the person resided in the USA for at least 31 days, then you should go with the next condition, which is 183 days test. 183 days test. If not 31 days, so can we go for 183 days test? No. So we will stop there itself. Then he is not a resident anymore. Once he's satisfied with 31 days, then we can go with 183 days test. So 183 days test saying current year his number of days, 100% number of days we will consider 100% number of days, and preceding year number of days divided by 3, and preceding previous year number of days divided by 6. So just sum up everything. If it is more than 183 days, then we can say taxpayer is meeting with SPT, then we will consider the person as resident. Let's say 2024 taxpayer number of days, which is 100 days, and 2023 100 days, and 2022 365 days. So can we consider the person as a resident? So taxpayer visa status, which is not a green card, he is having H1 visa. Now tell me, for 2024 purpose, so can we consider the person as a resident or not?
Yes, we can consider.
So for that, what are the important checks? So first one, we will see visa. So do we have green card? No. Do we have other than green card, do you have any visa which is temporary visa? Yes, we have temporary visa which is H1 visa. So then we'll apply SPT test. So first one, what is the first rule in SPT? How many days?
Current year at least 31 days.
31
31
days.
days. So are we meeting 31 days test? Yes.
Yes.
And second one, 183 days.
Greater than 183 days.
So 183 days, how you will calculate? Current year days by current year 100% days, which means 100 days we will take. Previous year number of days divided by
3.
3. That means 100 divided by 3, and preceding previous year number of days divided by
6.
6. So how many days total we have?
It's more than
194.
183 days.
So 194 days. So can we consider the person as resident? Yes.
Yes.
So he is meeting SPT. So we will consider the person as resident and we can file 1040. And also SPT test we will not apply in case of educational visas. Educational visas, which means F1 or J1, F1 or J1, do we need to apply the SPT rule? No, they are straight away non-resident. F1 or J1 visas, they are straight away non-resident. Basically, like J1, 2 years out of 6 actually rule we have. So 2 years they must file non-resident, then they can go with the resident SPT. So if they want, but yeah, so educational visas generally F1 or J1 cases. So do we need to apply SPT rule? No. For J1, how long? 2 years. 2 years they are non-residents. And F1, 4 years. This is important. This you must remember. Educational visas, F1, 4 years, they are non-resident. J1, they are 2 years, they are non-resident. This is done. And non-resident alien. And also, some case we will not count. So this is days, exempted days. We can say in these exempted days, which is student or teacher visa, which is exempted visa. So for students are teachers. So student F1, teachers, which is a kind of apprentice, which is J1 actually. So student or teacher under any exempted visa. What are the exempted visas for residency purpose?
F1, J1.
F1, J1.
F1 or J1. So we will exempt these days. So for F1, 4 years and J1, 2 years. And also we have M visa or Q visa also we have. So M1, Q1, M visa, Q visa holder cases also, we will not count the days for SPT purpose. Not only for them, we have diplomats. Diplomats, Indian diplomat may be in the USA. So diplomat cases, do we need to apply the SPT rule? Because diplomat number of days we will not count at all. So diplomat days also not allowed. And only these, no, we have another important area which is very important. Commuting from Canada to USA. USA near countries we have Canada and Mexico. Canada and Mexico. Very near countries like Andhra, Telangana, how we used to go Andhra to Telangana, Telangana to Andhra. Likewise, Canada and Mexico, these are very near countries. So they do go on daily basis. I can say daily they do kind of commutation. So for work commuting from Canada to Mexico, so can we include those days for calculating SPT? No, only commuting days. So if they are residing in the USA, then it is fine. But they are just commuting from Canada to Mexico, which is on work basis, then also we will not include those number of days for calculating this SPT rule. So this is very important. Commuting from Canada to Mexico, do we need to include? No, we will not include those days for calculating SPT. Or some cases, some medical conditions prevent you to departure. So those days also we will not include in calculating SPT. Let's say taxpayer having some medical issues, because of that reason he is not able to departure. So he had a visa that was expired and he was unable to go to leave the USA because of his health condition. So can we include those number of days only because of medical condition? He is unable to departure. Can we include? No, not at all. We will include. And also professional athletic for charitable event. So let's say we have professional athlete Messi. So Messi uh, went to USA for an event, charity event. Those only charity days, how many days? Let's say he went to USA on December 1st and he went to USA for charitable event. Like there is one 501c3, we have charitable organization 501c3, which is charity cases. We generally can see this section, which is 501c3 section. So like we have a charitable organization. So this charitable organization requested him to come to the USA for to play an event. So whatever the number of days he participated in the charitable event, those days we will not consider. Like let's say he went to the USA on December 1st, but the actual charity on December 5th, and charity the number of days he played for the event December 5 to December 9th, and again he was there in the USA for till December 31st. So these 2 days are these 5 days are charitable days. 5, 6, 7, 8, 9. So these 5 days are charitable days. So remaining are not charitable days. So this is for practice. This is charity, and this is visiting purpose. Now, in this whole event, we will not include only these charitable days. So remaining days, can we include for calculating SPT? Yes, we can include the remaining days, but only these charitable days. So December 5th to December 9th, these days we will not include in calculating SPT because those are charitable events. So professional athletics case only we will see this. Okay, this is clear, guys. Any questions in this, guys? Yes,
No,
please.
Jess.
No questions. I got only one answer. Yes or no, guys, please.
No.
No
No
questions.
doubts. Yes.
Okay. Okay. Next one. This special rule. Usually, first year choice test and dual status alien and NRA spouse. So these important special areas you can do. You can just revise these topics because we don't have time. First year choice. Just make sure to see what is first year choice test, and also dual status alien and NRA spouse election. So this we already know. This make sure to see these three. And next one, special very important exam. IRS allow to test on these areas. We will cover these. So first important area, special scenarios. First one, child born and died during the year. Child born or died during the year. So in this case, how we will deal? So in case of HOH, so we require unmarried and married, unmarried and he should dependent children and 50% of cost of keeping up home expenses, everything we have, right? So child born and died during their cases, can we file HOH or QSS still? Because child may not be there whole year, right? But in this case,
Yes, we can file, but we will consider that child was there during
yeah,
the year, even though they died.
correct. So counted as living whole year. So we can count it as, so QSS cases, the children should be there for whole year, right? Anyone remember that point? QSS cases, the children should not be foster and the children should be there with the taxpayer for whole year. But child born or died during their cases, we may not satisfy with those conditions. So in that case, counted as living whole year. So you can consider it as children lived with the taxpayer for whole year. This is one important area. And kidnapped children cases, how you will deal. So children had been kidnapped by someone. So in kidnapped cases, can we consider the whole year?
Like temporary absence?
Sorry?
Like temporary absence, we can consider as kidnapped children as temporary absence?
Yes, still treated as living with the taxpayer. Okay. And temporary absence, right? Okay, let's see temporary absence. Child at college or hospital or military, so which is temporary absence. So in this case, still lived with the taxpayer. We will consider still lived with the taxpayer. So this is also another important area. And parent in the nursing home. So can we qualify for HOH case? HOH. So next one. Parent in the nursing home.
Yes.
How?
Taxpayers should spend more than 50% for their
Yes.
nursing home.
Yes, that's it. So do they need to reside with the taxpayer for whole year? Or even one day also not required. So taxpayer, the parents no need to reside with the taxpayer for HOH purpose. Parents still qualify for HOH if taxpayer pays more than 50% of the cost, then yes. And parent living in the own home, then parents have their own separate home. Then
also we can, because parents do
HOH.
not need
yes,
to leave.
HOH allowed if taxpayer pays more than 50% of home cost. So the previous one, nursing home cost, but here home cost. Okay, these are important areas. And boyfriend or girlfriend lived in the home, so they can qualify for HOH. Boyfriend
No.
or girlfriend
No.
never qualify for a taxpayer. So we will not consider. And foster children, what is the important key?
For QSS, foster child can't be qualified.
HOH?
Yes,
Yes.
qualified.
Yes. Qualifying children for HOH allowed, but not for HOH. This is very, very, very important. And yeah, so this non-custodial, we will cover this now. Parent give 8332 to non-custodial parent. So what is 8332 non-custodial? We will see. So usually parents can be two types. So for dependent purpose, so custodial parent and non-custodial. Custodial and non-custodial parents. Custodial means custodial parent means the dependent lived with the parent, so we will consider the person as custodial parent, right? So when the dependent lived with the taxpayer, we will consider the person as custodial parent. That means the physical presence of the dependent with the taxpayer only. Non-custodial, so dependent is not living with the dependent didn't live with the taxpayer. Then we will consider the parent as non-custodial parent. So for HO, so usually what we can do, the custodial parent can give the option to the non-custodial parent. Like let's say we have taxpayer and we have spouse. So taxpayer, spouse both are not living in the home. So that means taxpayer in Texas and spouse in New York. And taxpayer having dependent. So dependent is living with the taxpayer only, not with the spouse. Now when they are filing their tax return, taxpayer can give this custodial parent option, which means he can give the option to claim spouse we can taxpayer can give the dependent to claim in the spouse income tax return. So we are doing, we are we are giving the option to consider as a dependent, like we are giving the option to spouse, so who is actually not a custodial parent. So can we do like that? Yes, we can do that. So for that we have to file one form 8332, which is parents give form 8332 to non-custodial parents. Like taxpayer now, spouse now can file 8332, and here to consider as a dependent, he should reside with the taxpayer, right? So that is the basic important criteria. But here the dependent is not living with the spouse, but still we can file 8332, but still we can claim the credits. Whatever the credits we will receive, we can get all the credits. This is clear?
Yes.
But even though we are giving the option to spouse, we are giving this 8332 form, and we are giving the dependent option to claim credits, but still HOH purpose you cannot give. So now the spouse want to claim HOH. Can she claim? Because she is having 8332 form and she don't have dependents lived with them with the spouse. Can she claim HOH? No. This 8332 not for HOH, but this is for other than HOH purposes. Like what are the credits they want, they can claim. But can she claim HOH? HOH cases, they should reside physically with the taxpayer. For the child cases, half of the year. Other dependents, whole year. Parents, no need to live with the taxpayer. So these are the specified qualifying persons rules for HOH, right? We have seen. But if you are simply filing 8332, can we claim HOH? No, we
No.
cannot claim no HOH here. So HOH here, yes, even though you have given the form 8332, but still for HOH purpose, you can use that. But non-custodial parent, can we consider HOH? No, even though you are claiming as dependent in the tax return, but still you cannot claim HOH. This is clear? Yes, no?
Yes.
Parents give the form 8332 non-custodial parents. So this is a case where we have seen custodial to non-custodial parent. Yeah, and also in this case, custodial parent can still claim HOH or not. Yes, custodial parent, even though he is giving 8332, but still custodial parent can file HOH. No worries in that. Military spouse overseas, so which is absent due to diplomat, still considered as married and live together. So this is one more option. Okay, so this is done. And okay, this is also done. Yeah. Now tell me, what are the forms we have seen? What are the elections we have seen? So these forms and elections.
Can you explain military spouse overseas once time?
Which one?
Military spouse overseas.
Okay. Yeah. So taxpayer and spouse both are married, and the other spouse is not living in the absent because of the deployment, still considered as married and live together in the same home. Only for military cases.
Okay.
So what are the forms we have seen? Very, very important form, 1040X. 1040X for amending a return and used for changing MFS to MFJ or MFJ to MFS and annulment cases. Only in this filing status, what we have seen, 1040X uses MFS to MFJ we have seen, or MFS to MFJ, vice versa. And also annulment and yeah, and then we have seen one more form, which is form 8332, release of dependency claims. And also 1040 election, which is 6013 election we have seen. Okay, yeah. Yeah, that's it in this topic. I will share you a couple of MCQs, or I can say a couple of exam question bank. You can just have a glance on those, and let me pull down those here. Total checkpoints, I can say total 140 checkpoints we have for this unit. If you want, let's do few. So taxpayer separated for 10 months, but not. So what filing status we will see, guys, this in this case?
MF or MFS?
Which one?
MFJ or MFS?
Taxpayer separated for 10 months, but no
We can
divorce
file
decree.
single also in this.
No divorce decree. So they are legally married only, but not living in the same house. MFJ or MFS, correct. So someone told MFJ or MFS, that is correct. Legally separated under a decree, so they have legally separated. Now,
Single.
single or HOH. Couple married in 2024 but divorced on December 31st. What is the status?
Single.
Single or HOH.
Single or HOH, correct. Couple married in 2020 but annulled in 2024. How they amend pre-year returns?
By filing Form 1040X, by
From
amending
2020?
single
Yeah,
or head of household.
correct. Spouse disappear for 3 years but not legally presumed dead. Filing status will be?
Head of household.
If they having?
Considered as unmarried.
Yes, for considered as unmarried, we have the rules, right? So we must satisfy those rules. Then for HOH, yes, we can do that. Married couple living in different states all the year. Married couple living in the different state all the year. MFJ or MFS or HOH or single. Do they
Married filing jointly.
do they need to live with the same home? No, that is not a case for MFJ, right? So they can go with MFJ or MFS. So that is if they are willing to file jointly, then MFJ. If they are not willing to file jointly, then MFS. So taxpayer married to NRA spouse, no SSN or no ITIN. So filing option can be. So in this case, we can go with HOH. So this is only the case where no SSN or no ITIN, then we can go with HOH. This we have covered in the main unit, but yeah. NRS spouse refuses to elect treat as non-resident. What is filing status? Okay. This you can see later. Married, marriage valid under foreign country but not US laws. Yeah. So to consider as married, so they must follow US laws, not foreign laws. So foreign laws are not allowed. Even though they married in the foreign country, but fine. So they can again get these marital rules. They can follow US marital rules. Then the MF is allowed. So based on foreign rules, they must meet US rules. Then yes. So same sex, same gender couple married in state recognized marriage, but yeah. So what exactly this means? So this is allowed or not?
Allowed by filing MFG.
RDP with the children. Registered
HOH.
domestic or HOH. Married couple with spouse in a incapacitated all the year marital. Okay. So what filing strategy will choose? What is the option, guys, for this?
Gee, what is the meaning of incarcerated?
Anyone knows? Guys,
It means that they have been imprisoned. Like
which
they are
one?
in prison.
They are in.
Prison.
So
Jail.
yeah, yes. So in that case,
Like temporary absence.
so even though they are in the jail, but still yes, so they can go with MFJ or MFS or HH only considered as unmarried. Then we have to see the cases. So married they can go with. So if they're having additional conditions like other spouse is not willing to file jointly, then so if both are willing to file jointly, married filing jointly. If one spouse is not willing to file jointly, then married filing separately. And the last 6 months condition. So you can also use HOH. If only if considered as unmarried, then we can qualifying children. So yes, then we can go with HOH case. So that is in case of considered as unmarried cases. And next one, married couple.
In case of incarcerated is considered as temporary absence.
No. So taxpayer and spouse, do they need to reside in the same home for filing
No.
status? No, that's it.
Okay.
Temporary absence we will apply for dependents, not for taxpayer or co-taxpayer.
Okay.
Married couple where one spouse is deployed overseas for entire year filing status. Yes. Married
MFJ.
filing jointly?
MFJ.
MFJ, yes. Married couple where one spouse refuses to sign the return.
MFS.
MFS. Couple who remarries each other after divorce. How does this affect filing status for the year? Yeah, this kind of question we can see. Yeah, what is the answer? Couple remarries each other after divorce.
They can file MFJ
Yes,
because on the
because
last day they were married.
yes. So it is based on the marriage. So even though they can do n number of times, so they can take 100 times divorce and they can marry 100 times, that is fine. For income tax purpose, yeah, we just need to, see the last day of the tax year. If they are married, then file married filing jointly or separately. Couple who married on January 1st, they are married, are they married for pre-year year? Are they married for pre-year? Okay. Pre-year, no, right?
No.
So they should marry on the last day of the tax year. Marriage recognized, not recognized because ceremony was not legally valid. Okay. Yeah. So this is annulment, right? Marriage not recognized because ceremony
Yes.
was not legally valid. So this is filing status can be
Single.
single. Divorce filed is on January 1st and they married a single prior year. Divorce finalized on January 1st. Are they married for are single for prior tax year?
Married.
Married. Yes.
Married.
Couple married under common law. In state recognized common law. Federal tax purpose?
Considered as married.
Married. Common laws, yes. Couple married in community property state living apart 6 months. What does it affect marital status and reporting?
Incomes are split between.
That is for state purposes.
Yes.
For federal.
Yeah. So what are the days they resided together? Then only we will split. So here they're living apart last 6 months. So for state purposes, we will split actually. That's fine. No need to remember. Yeah. Amending return. Can taxpayer amend S to MFJ after original due date?
Yes.
Yes. MFJ to MFS after original
No.
return? No. Taxpayer filed MFJ but spouse refuses to cooperate. May change to MFS after deadline?
No.
No. Perfect. Couple annulled several years later. What must they amend?
3-year
1040X.
tax return.
Yes. What does annulment differ from divorce for tax purpose? Yes. So this is important. This is kind of tricky. Not tricky, but yeah. Annulment different from divorce, right? So divorce will impact from after divorce, but annulment from the
From the
beginning.
beginning.
From the beginning. Retrospective effect. Taxpayer mistakenly filed MFJ with wrong spouse info. What you will do?
Amend the tax return by filing
1040X.
M48.
Yes. Taxpayer filed MF, yes, but want to claim credit available only under MFJ. Can they amend? Yeah. So can they amend?
Yes. Within 3 years of an
3 years.
extended due date.
Yes, yes. Amending return when spouse died during the year.
Yes. Within 1 year.
This we have seen, right? We have seen in the previous, not in the revision. Yeah. So yeah. So in this case, generally,
MFJ.
yes, and also amending return when spouse died during their cases, we usually can, if they file MFJ and if they want to convert to MFS, so usually we have before filing the tax return. But spouse died cases, we usually allow 1 year time. 1 year time they can get. MFJ to MF, yes, they can do. MFJ to MFS within 1 year time they can do. Only if spouse died during the year. Okay. And filing an amended return to add NRI spouse to MFJ, what must be attached? Okay, this you can do. Amending
0133.
Yeah. Amending to reported joint to divorce. Okay. So married taxpayer lived apart last 6 months and had qualifying children. HOH allowed or not?
Yes.
Yes. Married taxpayer lived apart 5 months. HOH allowed or not?
No.
No.
Child live with 7 months. Taxpayer provided 60% of support. HOH allowed or not?
Yes.
Yes.
Yes. Child 6 months is enough, right? Yes.
Yeah.
And non-dependent lived with the taxpayer. HOH is allowed or not? No. Non-dependent?
No.
No. Custodial parent give 8332 to non-custodial parent. Can custodial parent still claim HOH?
Yes.
Yes. Non-custodial?
No.
No.
No. And girlfriend and her children live with the taxpayer. Taxpayer pays all expenses. HOH allowed or not?
No.
No.
Perfect. And boyfriend lived with the taxpayer all the year. HOH allowed or not?
No.
No.
Child lives away at college. HOH allowed or not?
Yes.
Yes.
Yes. So temporary options, right? Okay. Parents live in nursing home, pays more than 50%. HOH allowed or not?
Yes.
Yes.
And parents lived in home pays more than 50%.
Yes.
Sibling live with the taxpayer all the year. Meet pure test. HOH allowed or not?
Yes.
Yes.
So siblings should reside all the year. This is very important. And cousin live with the taxpayer 11 months only. HOH allowed or not?
No.
No.
Cousin should reside with the taxpayer more than
365 days.
so 365. Children born in October. HOH allowed or not? Children born in October.
Yes.
Born and death, yes. And children died in May.
Yes.
Yes.
Yes. Children kidnapped in March.
Yes.
Multiple support agreement taxpayer. Yeah. So this is very, very important. Let me see. Let me tell you. Multiple support agreement, which is the MSA, where taxpayer contributes 50%. So MSA cases usually, which means MSA means multiple support agreement for a single dependent. Anyone can support him financially. Like we have taxpayer, spouse, and cousins, and we have other any persons. Like let's say taxpayer provided 30% support to the dependent, and spouse supported 40%, and cousin supported 10, and here 20. Now no one can consider as dependent, but yeah, still the person is dependent, but for HOH purpose no one can consider as dependent for HOH purpose. So in this case, okay, so taxpayer 30 and spouse 40, cousin 10, and other person 20. Now this person is a dependent. Either taxpayer can claim, or spouse can claim, or cousin can claim, or other person can claim as a dependent. But for HOH purpose, taxpayer should pay more than 50%. Now in this case, taxpayer would like to claim his dependent, yes, but can he claim HOH? No. To claim HOH, so if there is multiple support agreement, taxpayer should contribute more than 50%. So in this case, taxpayer had contributed 52%, and spouse 28, which is around 10. So in this case, can we claim HOH? Yes. So taxpayer can claim. Yeah,
can
taxpayer can claim HOH. So HOH cases, in case multiple support agreement, so more than 50% should be there. This is very important. And stepchild lives with the taxpayer, but no legal adoption. Can we claim?
Yes.
Yes. And foster children lived with the taxpayer all the year.
Yes.
Yes. And taxpayer lived with the dependent parent in the parent's home.
Yes.
Taxpayer lived with the dependent parent in parent's home. What it means? So can we claim, guys? I'm not sure the question. Okay, fine. You can just see that later. Dependent parent lived with the taxpayer but pays only 40%.
No.
No, not allowed. Qualifying surviving spouse. Spouse died this year. What status?
MFJ.
MFJ.
Spouse died last year. Does qualify for QSS?
Yes.
Yes.
MFJ. Yes. Spouse died 2 years ago. Qualify for HOH? QSS?
Yes.
2 years ago.
In current year,
No.
MFJ. 2 years QSS.
Yes. Child must meet requirement for QSS. What requirement?
Yes.
What requirements?
All the year
Yes.
except temporary absence.
All the year except temporary options. Taxpayer with the foster children, QSS allowed or not?
No.
Taxpayer remarries during the QSS period?
No.
No QSS, but can qualify for MFJ or MF.
MFS.
Taxpayer with the dependent children, but lived with children only for 5 months. Allowed or not?
No.
You know, right? Why no?
The children should reside with the taxpayer all the year, except in case of temporary absence.
Yes. Children goes to college, returning on holidays. QSS allowed or not?
Yes.
Temporary absence is allowed. Children are with the other parent for 7 months.
No.
In QSS, there is no other parent, right?
Correct. Child is with other parent for 7 months. So yeah, child lived is with the grandparents for 7 months. QSS allowed or not?
No.
Taxpayer children is taxpayer child. Yeah. So now can we do this? Taxpayer child is married but a dependent.
No, because they won't be living with
No.
No or yes? Yes, but if meeting other conditions.
Depends upon conditions.
Joint. So yes, but dependent filing tax return is just to claim refund. Then yes. And dependency impacting status. Yeah. Child who is joint written for federal for refund. Yeah. Child who files a joint return. Yes. So in this case, it is allowed, right? Child earns income but doesn't provide 50% of support. So dependent. Yes or no?
Yes.
Yes or no, guys? So this we will see the dependency. So this we will see the dependency. Yeah, that is yes, but we'll see. Yeah, this we have seen. Parents pays 40, auntie pays pays 30, taxpayer pays 30. MSA possible. So MSA multi-support agreement, right? So this we have seen non-coastal parent. Okay, this we will see in the tomorrow dependence topic. Yeah. Which expense count for 50% expenses?
Rent, mortgage, interest, utilities,
Home and
repairs,
food.
food eaten.
Home related expenses plus food eaten in the home. So do clothing, school expenses count as home cost?
No.
No.
Child support counts as providing home cost? No. So
No.
only food plus
Home expenses.
home. What home expenses counts taxpayer in rent versus own home? Yeah. So we know, right? We can do that. Does the value of the home owned outright count towards home cost? No. Food eaten in the home outside the home counts. Okay. Do food eaten outside home count?
No.
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 Sure.
Outside the home, right?
Which one?
Food eaten outside the home, right? So it's considered as no.
Okay. So food eaten in the home, yes. So food eaten outside of the home, so yeah, we will not include. So this is no. If two people share rent 50-50, who qualify for HOH?
With whom the kids would be residing.
Yes. And medical healthcare counts?
No.
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 How to treat section 8? Okay, this is not required. Living in someone else's home. So can the person claim HOH?
No.
They should reside in the same home, right? So no. Apply SPT to calculate residency with provided days count. Yeah. Student F1 visa, which days counts?
4 years of exempt individual. After 4 years, they count for residential test.
Correct. Teacher on J visa.
2 years is
2 years.
exempt individual.
Yes.
After 2 years.
Yes. Athlete in charity event. Do they?
No.
Do they? No.
No.
Commuting
No.
from Mexico to Canada.
No.
Canada to
No.
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 Does hospital due to medical condition
No.
excluded?
No.
How to apply 31 days rule? So this
Current year.
yeah. So this 31
Current
days.
year.
Yeah. 31 days usually it should not be consistent. It should not be consecutive days. So it can be any days. So it should not be continuous days. Okay. Should not be. It cannot be continuous days. I can say. Not should not be. It cannot be continuous days. So fine. That is, in that case also we can apply 31 rules. Resident alien marriage to US citizen, filing status possible. So resident married to US citizen. So what filing status is possible?
1040.
Filing status can be married filing
MFG.
jointly. MFJ. NS spouse election to MFJ. What is required? You are filing election. What form we require?
6013G.
6013G. Dual status alien with filing status apply. So dual status cases, they cannot get actually standard deduction. They can claim only administrative deductions. So couple of rules we have. So dual status you can see. First year also you can see. Taxpayer is resident the last 100 days only. Status. Taxpayer is resident the last 100 days only. So what filing status? Resident or non-resident?
Non-resident.
Non-resident. Because 183 days condition is not meeting, right? So yeah. Days present while exempted days stayed longer afterwards. How come? Can we count after exempted
No.
days? After
Yes.
exempted days.
After exempted days is counted.
But while exempted days?
No.
No. H1B worker arriving middle of the year. SPT rule apply? Yes, we can apply SPT, but we have to see the rules, right? So SPT, we will apply the rules. Treaty-based non-resident election. What is election of? What is the effect of filing status? Yeah. So non-resident election cases, we can go with married filing jointly. NRS student marries US citizen, filing option will be
MFG.
MFJ, because one taxpayer resident and the taxpayer non-resident, we can use
By
the
filing 6013G.
yeah. Non-resident child can they be dependent? Yeah. So non-resident children, they cannot be, we cannot consider it as dependent. Non-resident parent, can they qualify taxpayer for HOH?
Yes, of Mexico and Canada.
Yeah, I think this yes, we haven't covered in the revision, but this is there in the original, main sessions. You can just read this. Community property rules. Okay, we'll see 1 to community property. Married couple in community property states filing MF. Yes. So how income reported? 50% couple live with apart front area. Do community property rules apply? One spouse move out of middle of year. So when they are actually residing in the same home, then only when they're actually living, then only we will use the community. So if they're not living, then no community rules. So for other state, we will not no community rules. So only in the income earned in the community state only we will apply. So this no need to remember. Just 50% at least you can remember. Children kidnapped by non-family member. Can they
Yes.
do? So I have seen one case, recently I have seen same this family member only kidnapped, so he didn't even pick the call everything. So in that case I have to take the call before filing the return. So I have considered as dependent only on the main taxpayer return. So I have checked well, like when we are filing it will show an error whether other person kidnapped main person claimed as dependent or not. So in that case you can if it is showing kind of error, then we have to see. But yeah, so kidnapped cases, non-family member HOH allowed, yes. So children adopted are placed for adoption when QSS when do QC rule apply? Qualifying children rule apply.
The children should reside with the TP more than 60, so 50%.
Yes. Children visited related to for summer camp. Summer camp?
Yes.
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 temporary away for medical reason.
Yes.
Yes.
And children spends more nights with the non-parent, but support differs. So it was, yes. We usually see how many days. So in this case, where exactly the other taxpayer residing. I mean dependent residing. So it is based on the number of days he resided with the taxpayer. Parents die mid year. HH allowed. Parent died mid of the year. HH allowed or not?
QSS, right?
No, parent for HH purpose. So we will include qualifying parents as well, right?
Yes.
Yes.
Yes. So yeah, so these are the cases. Non-custodial parent cases we will attach 8332. Yeah, so that's it only. So maximum areas we have covered. Yeah, I think we can wind up the session for now. With this, we have completed the unit 1. We will start unit 2 in the unit 3 and 4 we'll try to complete in the tomorrow session.